Let me tell you a fun fact. Within the last 2 centuries, more than 90% of the world's millionaires have been created by investing in real estate. But if done incorrectly, without the right knowledge, required skills, or partners, it can also create a ton of problems and a lot of sleepless nights. You feel like sometimes there are way too many gurus out there trying to sell you on a weekend course or just too much noise to cut right to the facts? Yup, we did too, and this is why we started this podcast. Our goal is to provide real estate investors, entrepreneurs, and enthusiasts with all of the most recent knowledge, secrets, tips, tricks, and tactics so that you can grow your own portfolios, increase your returns, net worth, and most importantly, create generational wealth for you and your loved ones. Remember, this is your real estate career. Information is your sword and shield, so eat hearty, prepare for battle, and grind your way to victory. My name is Tejas Gosai. I'm joined by my partner, Jeremy Moyer, and we welcome you to the Real Estate Investor MBA podcast. Hello, ladies and gentlemen. Welcome back to your favorite real estate podcast. It's Real Estate Investor MBA. I'm your host, Tejas Gosai. I have the honor and pleasure of entertaining you for a bit here. We're going to talk about real estate like we do every week. We are on Spotify, iTunes, Stitcher, Google Play, all over. And, we really have a great social media following. Thank you to everybody who's made this possible. That's what we always got to start with. A big, big thank you. Before we get into our amazing guests, Jason and Jake from Ethel Street Property Management, I wanted to tell you what I've been up to for the past few years. So 4 years ago, my partner, Jeff Sella, and I began a mission. We took on the task of launching a Regulation D real estate private equity fund with a 12 to 18% target return in the Lehigh Valley, aptly called the Lehigh Valley Private Equity Fund. If you've seen my LinkedIn, that's my main social media platform. I'm always giving updates and talking about what we're doing. And I think it's important to say that we have run into every problem humanly imaginable in getting off the ground. COVID was relentless. We had just gotten our SEC docs and paid our attorneys more money than I care to share. And it was go time. And then COVID happened. So we had to take a very long break. We actually finally got off the ground a year ago. Today is our birthday, our first year anniversary. And of course, I have to say thank you to all of our friends, family, and of course, our investors that are trusting us with their hard-earned capital. In the past year, we've welcomed 24 investors into our little family, and we've raised just a little over $4.4 million, which is a big deal for somebody who is newer to the private equity fund industry, seasoned in real estate. But this past year was just relentless, tremendous, and very rewarding. Hashtag blessed. Thank you, God. So we've proudly invested that capital to beautify the community in the Lehigh Valley and impact the housing crisis to create a safe space where families can cherish their most memorable moments. So this is how we create our returns. We are above a 10% annualized return for the past 2 quarters. And currently, our return that's coming out right now is above an 11%. More specifically, we acquired 2 buy and hold properties that total 24 units. I'm going to talk about one of them today. We sold 2 multifamily properties, making a $90,000 profit in 90 days. And our lending division financed 15 real estate projects consisting of 2 commercial properties, 2 multifamily properties, and 11 single family homes. So we're doing a lot to work for our investors, but we're enjoying what we're doing. We're making an impact here. There's a lot of folks that we're communicating with. I know a lot of our tenants. Obviously, I'm the one hunting the properties every day, and I'm the first one that goes in and out. But we have a tremendous responsibility to the community, to our investors, and we run properties well. We have a very, very good team that helps us execute what we're doing. James Reardon and Adekunle Popola on the commercial real estate side. And of course, Jeff and his team, we wouldn't be able to get the deals that we do and move the way that we are without everyone that's come together for this. So big thank you. So for this podcast, I wanted to give detailed look at what I as a fund manager am doing with our property management company, Ethel Street Management. So they are managing an 8-unit portfolio in downtown Easton that we purchased in April. And I'm in the weeds with them every day since acquisition, creating value with renovations, working with the contracting team, and then re-renting the units significantly above market, which we'll talk about. Have to hit my pro forma, which is healthy. You'll see it in a minute. When we're done with this property, it will have a 27% IRR and a 14% cash on cash return, which is what helps the Lehigh Valley Private Equity Fund reach that 12 to 18% range for our annual return. So without further ado, so Jason and Jake, two Penn State alumni. I went there as well. So it's a big show for Penn State. They began their real estate investing career in upstate New York, investing in small fix and flip, cash out refinance projects. Quickly after they transitioned to buy and holds, acquiring rental properties here in the Lehigh Valley. To date, they have purchased 24 apartment units, 17 of which are in the Lehigh Valley. They launched Ethel Street Management in 2021 after having terrible experiences with other property management companies in the area. They had built an efficient system for managing their own properties and saw an opportunity to fill a need in the market, applying the same systems to provide great property management service to other investors. They currently manage over 100 apartment units across Allentown, Bethlehem, and Easton, comprising of the Lehigh Valley or making up the Lehigh Valley, and are openly taking additional clients here. We just started working with them. So they're also growing their portfolio. Great guys, super excited to bring them on. And it's a great interview. Hope you enjoy it. Cheers. All right, let's start with a bang. Thank you, Jason. Jake, thanks for being here. We got to kick it off with we are
Penn State.
That's right. It is rare to have 3 Penn State alumni on at one time. Honor, pleasure. You guys are serious investors. You've closed millions in business, and now you went from just a couple units to managing over 100 units in a year. It's nuts. Tell me about it.
Yeah, it's been a journey. Like any startup of sorts, there's a lot of kinks in the beginning, but the journey is just as fun and you learn a ton along the way. You get a lot of reps in with how to help our clients optimize their assets. And it's really fun being able to help our clients, such as the fund, being able to achieve various objectives, whether it's financial or operational, to really meet the goals. That really is the fun of it all. And that's why we're all here. And we're purpose built from the pain points that we've seen as investors. Investing, they say never invest too far away from home. We didn't listen to anybody. And so that was the result of knowing the pain points of property management, which really led to us to this conversation today. So thanks for asking the question.
Yeah, so exactly. You guys are making moves. I'm going to share some information in a minute. Hitting the rents are difficult. Tenants, it's a fluid system. So you always have something new to deal with. Jake, I've been talking to you almost every day since we took over the property.
And it's been a pleasure so far, at least.
Yeah, but we've had a bunch of difficulties. There's some tenants that are not maintaining the property in the best condition. We just got a few new tenants. You help us hit our projections. You want to talk a little bit about your process and, some of the tech that you have involved?
Of course. Yeah, happy to. So we went into this with a couple of open units and a couple of others that were giving us a bit of trouble. We are definitely transitioning out of that. We just had a tenant move into one of the apartments today. We just had a lease signed for another apartment this morning. So things are moving forward. I think there's kind of one more kink in the armor here that we need to get rid of, which we're very much on track to do. And we'll be getting you guys pretty close to, if not right on those projections. In terms of processes, would you like to know a little bit, I guess, how we go about the leasing process or what in particular?
Yeah, a lot of our listeners, some folks don't believe in property management companies. They want to do it themselves. I think we've all made that mistake. And then there's a lot of folks that are on the cusp of using a property management company. So they don't know some of the things that you're covering. For example, you have systems in place to notify us as the owners on when tenancy is coming due.
Sure.
We're having a quarterly meeting. So I think it's just important to just explain how intricate you guys have been in the system you built.
Definitely. Yeah, I think there's a kind of psychological dilemma that many, if not all, real estate investors that at least start in small multifamily go through. They buy into real estate thinking that it's going to be a passive investment. And then when they buy in, they recognize that it's more than just putting money into an index fund and watching as your account grows. There's an asset that you need to manage. There are other people on the other side of this that you need to communicate with, which are sometimes difficult. And they recognize, okay, we're going to need to do some work here to manage this property. So let's decide, should we hire a property management company or should we do it ourselves? Oftentimes trying to do it themselves, realizing it's a lot of work, exploring, working with a property management company and finding that oftentimes with PM companies that they're not quite meeting the needs that they need to meet in terms of customer service, communication. We've run into this problem ourselves and it's frustrating. And I think just in general, as real estate investors work through different PM companies, they start to get a little bit of a bad taste in their mouth. And this is something we experience. We know the pains because we've dealt with it with multiple companies, that we know how to solve those pains. And going into this, building this business, we wanted to focus most importantly on the problems that we saw ourselves. And those problems were, like I said, around lack of communication, also how property management companies were going about solving maintenance issues, how they were presenting finances. In multiple aspects of the service that we were getting, we saw issues and we focused on solving those and putting the systems in place to effectively solve those and to be efficient and to put the people in place on our team that can do a great job. One issue that we ran into with multiple property management companies is the owner of the business was the one going to the apartment, taking out the trash, communicating with the tenants. And what we decided from the get-go was we're going to be a property management company and not just a property manager. And this allows us to take a step back for Jason and I to be more so behind the scenes, making sure the gears are greased and the systems are working and we have our people in place to do the job right. Everything from leasing to maintenance to tenant communication to accounting. We really have great people that are doing a great job for us. And that's why so far we've gotten great feedback, positive feedback from the owners that we work with.
Yeah, that's awesome. Jason, when you guys ramped up your systems, I'm sure you had to change or adapt or evolve, on the tech side, portals and a bunch of that information that the owners need. How did you guys conquer those items?
Yeah, it's a great question. And I think a common fallacy is let's find tech and find a way for it to solve a problem. And in reality, you can't really think like that in terms of solving your problems. It's let's start with what are the manual repeatable things that we do that maybe technology can solve. And, we have our source of truth, which is Buildium, which really centralizes all of the core functions from accounting to maintenance ticketing, rent collections. And then beyond that, some of the other pain points were being able to automatically do rent showings and scheduling. And so how do you automate that sort of back and forth? And so we found the cumbersome manual processes as pain points and tried to figure out if there were technology solutions around that, so that we can consistently have a high quality process, because with humans, there's errors sometimes. And so if we can have technology where there's manual processes that are prone to error, let's see if there's technology that can solve for that instead of just going out and shopping for technology and seeing how it can apply to the business. And that fundamental way of thinking has allowed us to create consistent, scalable experience for our owners. And that's really how we think about technology. It's not just apply technology, then figure out where, but what are the problems and how can technology solve it?
Awesome. Systems and people and processes. So I'm a big proponent of educating people on why they absolutely need a property management company if they want to take this business seriously. We've had some great folks on in the past that describe like the necessity of preserving the asset and things like that, which I thought it was important with you guys to just share how you're doing it, because people don't get the nitty gritty. I'm going to share some of the financials and why this is so important, why we relied on you to help us with meeting our goals. So you have to be running into people that are like, do it for 6%, or trying to skimp or trying to negotiate. I'm one of those folks that are like, you get what you pay for. You want the people that you're working with to have full control. I don't want to speak to tenants or worry about a maintenance issue. So what are some of the pitfalls you're seeing, some of the hurdles with some of the folks that may not have a property management company, or you're trying to win their business?
Yeah, it's a great question. I think just overall in business and maybe generally in life, that you kind of start out doing something, and this is definitely, we are totally guilty of this. We started out renovating these shacks in upstate New York and hiring contractors that weren't the best quality because it saved us money. And I think what we've learned very much the hard way over time in this business is that you get what you pay for. So of course, now we are on the other side of that and making sure that we're communicating that to the owners that we communicate with. And I think just in general, what we've found, and this is something that's a common issue, I think in many markets for small multifamily property management, is there aren't a ton of great options. It definitely helps to have that baseline when owners have worked with another property management company in the area and they recognize what kind of is the standard for the level of service. It allows us to really shine there because we have now testimonials from the owners we work with. We have our experience and our systems that I talked about. Because of that, it becomes, I'd say, quite easy to really show the value there. But of course, the value really isn't shown until you start working with them. And so far, the experience that we've had is a great one. And our owners have been really happy with the service that we've provided. But going into the conversation, there's a standard pricing in the property management business. And we started off offering a little bit cheaper of a price. And I think we found that, if the standard is offering, a higher price than we are and we're providing a better service, that it's definitely fair for us to offer that. And in general, there's been acceptance of the pricing that we offer. But of course, we're definitely willing to work with owners based on their needs and their potential for growth. And there's multiple factors associated.
So awesome answer. I represent, and my team and with the fund, we represent accredited investors, folks that are looking for generational wealth and, obviously active and passive income. But having a property management company that matters for you specifically is key. We're looking at just this territory, the Lehigh Valley, and I am all over LinkedIn and social media and constantly gabbing about how I believe the Lehigh Valley is we're like borderline recession proof, or we're in a bubble because of our location and farmland and development. Amazon's here. Nike has 1 million square feet. So you guys are here and there's a flock of people coming and our market has been growing tremendously. Can you talk about our specific market, what you've seen with your investors, the type of inventory they're buying? Are you guys doing a lot of 2 units, 4 units, or 6, 8 units? Just some detail on what's actively happening right now.
Yeah, I can take this one. And so I think you need to split it out into macro and micro. Macro, more thematically, well, why are maybe people from New York, New Jersey, even California, even considering investing in or even finding Lehigh Valley? There's a lot of tailwinds, right? If you think about the mix of the economy, the location in the Northeast really as an e-commerce hub, the demographics, and the overall grittiness of the Lehigh Valley, it really has withstood several market cycles. And overall, the yields that you get here really are very competitive when it comes to the Northeast. If you look at New Jersey, New York, more broadly Connecticut, and more in the Northeast, the laws are also such that they're much more friendlier to and more amenable to working with landlords. And with that, you have less regulatory risk. And so I think these are a lot of thematically from more institutional investors and even the small mom and pops really think about and consider when they think, where do I spend my time and my money? And they think about which markets to go into. There's a lot of different factors, as you know, and why you planted your flag here and why we did too. And, on the ground, what's really exciting is the amount of growth left. There is so much growth left. You think about New York City, there's plenty of skyscrapers over there. But when you look at Allentown, when you look at Lehigh Valley, you look up and there's just so much potential, and you can really smell the excitement and the energy of where it can go and where it will go. And I think that people like us are really attracted to that excitement of the future, and we're all in on it. And that's really what has driven us to bet on the long term in the Lehigh Valley. And I think many others, not just because of they're chasing their returns, but they're really chasing and believing in what Lehigh Valley stands for. And I don't see anyone coming in and out of the market like that. I think it's a good thing that there's really organizational interest, across the value chain, whether it's companies, investors, people coming from larger metros to live here. And I think that will only continue.
Totally. And microeconomics. So Jake, you're dealing with the day in and day out. We have tremendous rent adjustments that have taken place. Our rents have gone through the roof because there's so many folks moving here. They need rentals. The residential properties are outpriced, which also requires more people to rent. So along with what Jason's saying, in the Lehigh Valley, how are your investors, you guys raising rents, on the unit count, just some of that? Are they still getting deals? It's really hard in this country to find a good deal, let alone a market that tons of people are looking at from all over the country.
Sure. Yeah. In regards to rents, when we bring on a new client, one of the big projects that we focus on amongst the many that are involved in bringing on that portfolio or that property is taking a look at the current rent roll and seeing if there's some opportunity to increase. We do a pretty in-depth analysis looking at comps in the market and understanding where can we push the bar here, push that ceiling and increase rents. And then from there, we'll work with the owner to understand, well, if an owner wants to get a unit filled faster, of course, we're going to be a little bit more conservative with that rent price. But ultimately, we're ambitious ourselves and we have ambitions for our own units. And we're going to encourage owners to think the same so that they can get the most they can out of this investment. There's definitely, I think, going into it, you don't maybe recognize how many different moving parts there are. And some numbers are unpredictable, like maintenance, may be large. That maintenance number may be larger than what you had expected based on the condition of the property. And because of that, of course, we want to cater to the market and provide a good place to live at an affordable cost for tenants. But at the same time, this is very much an investment. And you need to kind of have number one in mind first, of course. So we think that way and we put ourselves in the shoes of the clients that we work with because we are investors ourselves, because we understand the costs that go along with operating a property, and because we understand it's an investment. So that's how we think about it.
Awesome. So I got to get this question answered. Like the unit count for the Lehigh Valley, we're not, like you were saying, Jason, we are not New York. We're the third largest city in Pennsylvania, just over the New Jersey border. Units, I tell everybody, I'm like, you're not going to get a 50 unit here. You might not even get a 20 unit with how crazy it is. Our unit counts have been 2 to 10, like that's the sweet spot. What about your clients? What do they own? Can you share, does anyone have a larger unit count, a lot of portfolios? I know.
It's largely made up of smaller multifamily, but a bunch of them, right? And so what the mix really is a bunch of 2 to 10 unit properties. There's not a ton of the larger sort of assets that you're alluding to, specifically in Allentown, Easton, and Bethlehem. If you think about more tertiary and you start getting around Whitehall and more south, and you think of Emmaus, like you'll find more there, more garden style, sprawling. But when you think about the housing stock, there's just a ton of this small multifamily. And going back to your question also about finding a deal, there's also just more deals by volume to be had in that asset size compared to, because when you start going and jumping up to the 20 plus, you're now competing with national organizations and institutions, not just the people on the ground. And so the institutional investors aren't necessarily looking at because it may not be worth their time. I'm talking, the Blackstones and the Redwoods that are looking in Lehigh Valley and buying a lot here. And so it creates this opportunity for the non-institutional shops to really capture this market. And so there's more opportunity to compete for deals on that stage. And so that's where most of our clients are. And to put yourself, to really more bluntly answer your question about finding deals in this market, I would say it's all about putting yourself in the position to find deals. And so you really need to be proactive, know who are the people doing deals, building great relationships, thinking about brokers, bankers, insurance brokers, lenders, anyone who touches transactions, you need to become and build relationships with. And if you're not interested in building those relationships, then maybe this isn't the industry for you, because this is an industry built on relationships.
The backbone, plenty of experts we've had on, like network, build your beehive and don't sting anybody, right? Like, yeah, I love it. We got just a few more minutes. I want to brag about what you did with our rents. And I hate it that, we have to worry about crunch time. So this is the property that I showed earlier in the video. Ethel Street is helped us from acquisition to now. Just to highlight a couple of our rents here. We have a low rent of $550, a lot of value add there. Obviously, we had some other decent rents, but if you look at the projections, and this is in downtown Easton, it's a portfolio of 5-unit plus 3 townhouses. We have almost doubled rents on some of these, but we have a townhouse that just went from $975 to $1,900, right, Jake?
Sorry, I was muted. Apologies.
All
Yes.
good. No problem. Look, you're my winner here. I want to brag about what you guys did. It was a high projection, but I was like, to the other folks in the fund, I'm like, just trust me on it. I know we can do it. How long did it take you to get that rent? We had another single unit go from like $550 to $1,200. And this morning, you just got our final townhouse rented around $1,800. Talk about that. How quick was it to fill? Difficulty?
Yeah, definitely. So I think a baseline had been set for by the end of July to have these units filled out, which we met that mark. It took a little bit longer to get these off the market. I think definitely you guys were, although not outrageous in what you were looking for from a price standpoint, I think it was definitely on the higher end. So it took a little bit longer to rent out. And, that goes along with what I was saying before. We work with the owners and understand, how ambitious they want to be to get a certain rent amount. And obviously, as a fund, you guys have metrics you need to meet, and we think about all that stuff. And of course, we adjusted what we do to try and push to get these units rented out. It did take a bit, like I said, a bit longer than if we were to rent these out more conservatively from a price standpoint.
But let me jump in. We got to talk about days. Okay. I had these rents, and you're saying it was a long period of time. It was a couple weeks, and things were cooking, and we're really restrictive about tenants. So sure. I think you guys knocked it out of the park. I think you're being humble about it. And the fun part is we're going to take this from $8,350 up to $12,225. We're running out of time, so I'm going to try to jam through the fun stuff. Let's see if I can get this. You always have technical difficulties when you're moving fast. This will help us get our gross rents up significantly. It's going to take us from a 2.33 cap rate at acquisition to a cash on cash of just around 13.5%. This is the nitty gritty of real estate. This is why you work with a property management company. This is why I encourage everyone to do this the right way. We had this plan 7 months ago. Obviously, no one believes in it until it happens. And so as a fund, pushing that through, we took this property, bought it just around $1 million. Yes, rents were not good. Tenants were difficult. We did some minor renovations. We'll get to where we're going to in the next few months. The IRR in this property is 27%, and I'm conservative on my numbers. So, you guys have knocked it out of the park. I'm encouraging folks to work with you. This is the meat and potatoes of what happens. Your asset gets tremendous value. This is why we're in the business. We purchased this in cash. Our fund has not had financing yet, so we're refinancing. I needed to hit these numbers, which, you guys obviously helped with. So we got a couple seconds. I bragged about you. Thank you guys for being here. Any last words?
Thanks for having us. Really appreciate it. It was a great time.
Yeah, Tejas, it's been a pleasure working with you. Excited to see how we, continue the relationship and grow together.
For sure. Wish you guys the best. Penn State alums. It's Real Estate Investor MBA. I'm your host, Tejas Gosai. Check out Spotify, LinkedIn, YouTube, Twitter. We're all over the place. We love you guys. We'll see you next week. Cheers.